Hello there, and what's good? What's good? Hope all is well. Welcome to the Elevation Lab. I am your host, Alex the Billionaire. On the previous episodes, I got to introduce to you what forex really is. Also went ahead to introduce to you what candlesticks are and how to read candlesticks, and also introduced how you can get to measure the market movement and also how you get to profit from it. And if you haven't watched that, just make sure you go back and watch my last two previous videos. If you're totally new to forex, if you're just getting started, these are videos that are going to be of great help in your journey. So on today's episode, I'll be speaking on, or rather I'll be teaching some market structure. This is how the market moves and all that. So without much further ado, let's get into it. I'll go ahead and share my screen. Again, guys, don't you forget to go ahead and gives me a thumbs up, give me that share button, hit that share button to grow the community if you find value at the end of this session. So I'll be sharing my screen. Okay, so as we had discussed earlier on, we said that candlesticks, these are more like price action tools, which are used, or rather something that represents price action, and it's used in technical analysis. And today we are going to study a bit on the same technical analysis. So we say the candlestick will always represent price action on a given time frame. For instance, I'm currently on the 4-hour time frame, and you can always look the charts all the way from. You can look at the charts on any time frame, depending on what type of trader you are. And it's this printing of candlesticks that creates what we call a chart. And this, what you're seeing right here, is referred to as a price chart. And a price chart will always help us analyze, or rather we look at the past, what's happening on the left, to determine what could possibly happen on the right. So normally when the market is moving, we always say the market moves in what we refer to as waves. The market does not move on a straight path. The market always moves in waves. And as we had talked earlier on our previous session, we said we're in forex, we're either buying or selling. This simply means we have two types of movement. We have market that is moving on an upwards direction, and we also have the market that is moving on a downwards direction. And when the market is moving upwards, that simply means that the buyers are in control. And when the market is moving towards the downwards, or rather the downside, that simply means the seller side in control. Also, we have situations where the market is not moving either upwards or downwards. And during that time, the market will always be moving in a sideways direction. And when the market is moving in a sideways direction, we always say the market is in a range or in a consolidation. So let me go ahead and show you how the market moves. So we said, again, something you really need to understand, that upward movement is referred to as an uptrend, and the downward movement is referred to as a downtrend. And we always say in forex, keep this in mind: the trend is your friend. You don't want to be betting against the market. You don't want to be going against the market. So always remember, the trend is your friend. We buy when we're going up, we sell when we're going down. So this is basically how the market moves. As we say, the market doesn't move in a straight line. So this is how the market moves. So if we are on an uptrend, an uptrend market, this simply means we have the market moving, pushing from a low point to a high point, then to another point which is higher than the previous one, then again to another higher point, and so on and so forth. And right there, it's when you can say now this market is moving towards an upper direction. So let's say for instance we had something of this sort. We had like a substructure. I'm going to draw this just to help us have a better understanding. So let's say, for instance, we moved from this lower low point. We'll refer to this as a lower low. Let's refer this as a lower low. I'll abbreviate it as a lower low. I'll just use abbreviations just to make things easier. Okay. But let me write the entire thing. So the market moved from this lower low, then we saw this push all the way up, taking out our previous high. This was the previous high, and now we have a high which is above the previous high, and this right here is referred to as a higher high. Then again, we said the market doesn't move in a straight line. We have a push in the direction of the trend, then we have a push opposite direction of the trend, and this push in the opposite direction of the trend is referred to as a pullback. It's referred to as a pullback or a correction. Why? You'll understand the market doesn't move in a straight line because let's say for instance this right here, this is the line, this right here, it's referred to as the pullback or the correction. So let's say for instance we had like people taking the buy positions from this point. Maybe this was their target area because of their own reasons. Yeah, so we have like people taking profits. We also have people on the other side who are selling at the same time. So that's why we have the market moving towards the opposite direction, because the market reached a point where it faced exhaustion, and that's why we end up pulling back. So this right here, this push, sorry guys, this push here, this push that is going on the opposite direction is referred to as a pullback or a correction. And then the market, after the pullback, now we have a low which is above our previous low. So now this is referred to as a higher low. Why? Because it is a low, yes, but again it's higher than the previous low that we had. Then from this point we have again aggressive push to the upside. You can see maybe more buy position coming in to push the market even higher, now creating a high which is above the previous high. So again, the market has created what we call a higher high. And this right here, what you guys are seeing, this now is the structure. This is what we call the structure of an uptrend market. Again, a pullback, then you have a low which is above the previous higher low. So again, it's higher than the previous low, so it's a higher low. So right here, what you guys are seeing is a structure of a market that is on an uptrend. It's going up, as you can see. As you can see, we are moving towards this direction. Yeah? This right here is referred to as an uptrend market or a buyer's market. This is a market where buyers are in control. Yeah. On the other side, when we are pushing towards the downside, or rather when sellers are in control, we have a scenario where price is creating such moves. Let me take this out just to declutter this space. Okay, so now we understand Understand now the price is pushing. As you can see, we're pushing from this higher point, then the market pushes all the way down, creating, or rather giving us a point which is lower than the previous higher low. And this right here now, we already see the market giving us a low which is below the previous low. So automatically now this becomes a lower low. Why? Because it's lower than the previous low. So this is referred to as a lower low. The computer is lagging. Low. Computers are getting some value. Again, we also seen a situation where the market again pulls back, then creates another high, but it's below our previous high. We never saw a push of this sort at it to create a higher high, no, but the market pushes not past this high. So automatically now we have a new high which is below the previous high, and this right here is referred to as a lower high. And that's how we can get to say now we are on a seller's market. Why? Because we get to see formation of lower lows and lower highs. So on an uptrend market, the market forms higher lows and higher highs, higher lows and higher highs. On a downtrend market, on the other side, the market forms lower lows and lower highs. And this right here is what we refer to as a downtrend or a seller's market. We've also said there's a situation where the market is not moving upwards or downwards, and that's when we can say the market is in a consolidation, and a consolidation looks a lot like this. It's a scenario where the market is not moving up, the market is not moving down, the market is just moving in a range. And looks a lot like this. We're just creating highs and lows, nothing more. This is a consolidation market, and as we go on further, you will get to understand this simply signifies indecision or even institutional activities. So again, the only way that you can get to understand there's a shift in a trend is when we have what we refer to as a break of structure. And I'll show you what a break of structure really is. For instance, we saw this push from a higher high to a lower low. So the moment our price pushed past this previous higher low to give us a low which is lower than this, now we refer to this as a break of structure. Why? We've broken from the structure of an uptrend market where we had higher lows and higher highs, higher lows and higher highs, to the structure of a downtrend market where now we have lower lows and lower highs, lower lows and lower highs. So right here, this is what we refer to as a break of structure. We can also get to see the same instance right here where we had the market giving us lower lows and lower highs, then lower lows, then we see a push up past the previous lower high that we had here, market creating a high that is higher than the previous one. So again, on this area here, we broke structure to the upside, signaling the end of a downtrend and the beginning of an uptrend. And the same stuff happened here. Break of structure signaling the end of a uptrend and the beginning of a downtrend. So basically, that's how structure looks like. Again, I'm going to put two rules in place. And the first rule says we buy at higher lows. The second rule is going to say sell at lower lows. lower highs. So what does this mean? Anytime that you miss an opportunity, let's say for instance you missed this buy position here, you're always advised, don't jump the gun, don't jump into a position, wait for the next pullback for you to get your nice entry. Why? Because the price doesn't move in a straight line. Price will always form waves, and it's on these areas where we want to be buying. We don't want to be buying up here. We don't want to be buying up here. Let me show you. You don't want to be buying on higher highs. Why? Because you get to buy at the highest price, then you experience a scenario where you're in a drawdown and now you're already panicking, you want to close out your trades, you're confused, then immediately you close out your trade, you realize price goes into your favor. So what you really want to be doing, you want to be buying at the cheapest prices, and this is where we have the cheapest prices right here. We want to be buying at the cheapest prices and selling at the highest prices right there. So keep this in mind. We buy at higher lows and sell at lower highs. Okay, again, it's not going to look this perfect when it comes to like the real thing. So I would want us to get into the markets. Let's see if we can be able to identify the same on a real time market. So let's just go back and start from somewhere here. Let's begin from here. So for instance, I'm currently looking at the 4-hour chart, and you guys can see we at this particular time we were on an uptrend market. Why? Because you can see there was formation of higher lows and higher highs, 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 higher lows and higher highs. And again, you keep on seeing that. Let me indicate it properly for you guys. You can see from a higher low to a higher high, then higher low, higher high, then higher low, then higher high. Then the market shifted from this high point to this area, giving us a lower low. So again, we can already say right here, we experienced a break of structure in this time frame, and we are saying we broke structure because now we can see this was our most recent higher low, and price pushed past it to give us a lower low here, and now again lower high. As you guys can see, again you have a lower low, then a lower high, and again same thing, a lower low. So basically this is how you get to like look at structure. Again, structure is the same in all time frames, just that we have like so much noise on lower time frames. So it's really important to be able to identify structure. Again, you can see the same thing is happening. We have scenario where we have lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then you can see again some shift in the trend where we had formation of a higher low. Why? Because price never went past this area, higher low, then it pushed all the way, broke structure here, created a higher high, then now we have again a higher low, and so on. So basically anytime we want to be buying, let's say we want to be buying, now we want to be looking for our buy positions from these zones here. If we are selling, we want to be looking for our sell positions from these areas here. Yeah, why? Because again we said we buy at higher lows and sell at lower highs. Let's see if we can go down to a much smaller time frame, see if we can be able to identify the same thing. Again, look at this. At this case, we want to look at this push from here all the way here. See if you guys can be able to identify structure with me. So we're seeing this scenario where we had this higher low here. Again, why are we saying it's a higher low? Because you can see we had this push that took out this structure. So again, we had this higher low. I keep going back. Let's just stick from this point here. We had this, let's call this a higher high. Then price pulled back to give us a higher low right here. Then again, you can see this push. Price keeps on pushing up. We have the scenario where we have an equal high. An equal high is a scenario where price doesn't go past the previous high that we had here. So we had equal highs again, a mini pullback, giving us again a higher low, then price pushing past this zone all the way up to give us a higher high, again higher low, higher high, higher low, and a higher high. And that right here, you guys can see it's a structure for an uptrend market. So if you're looking to buy, these are the areas that you should be looking to buy from. This is where you should be looking to buy from, right there. These are the areas you should be looking to buy from. Again, you can see a shift in direction where we had price pushed from this high point all the way down, taking out this low and also taking out this low. So again, price pushed to break structure, giving us a lower low. You can see we have a lower low right here. We have this lower low, then lower high. Again, on my part 2, I'll be speaking about substructures, because on a structure we get to have substructures. This is something to give you like more insight on how to even understand market structure on a better level. So I'll be doing a part 2 of the same market structure, where I'll get to show you guys, I'll get to teach on swing points and substructures. Then I will also get to teach you guys on how to identify like strong areas of support and resistance. So again, you can see the formation of lower lows and lower highs. Why? Because our market never pushed past this high. So we had a new high, but it's below the previous one. So this is a lower high. Again, you can see the price pushing again, creating a low, but it's not lower than this. So again, this is more like higher low. Then price pushes again, gives us a lower high, and keeps on pushing to give us a lower low. Then again, lower high, a lower low, lower high, lower low. And that's right here, my friends. That's how you get to identify structure. So these are the areas that we should be looking to sell from. So I hope you guys got some value from this session. If you got value, make sure you go in your charts, try to see if you can identify structure. If you are able to identify structure, I leave my Instagram account on the description down below. After doing the assignment, you can like take a picture of your chart. This is where you get to do that. On this top right here, we have an option of taking a snapshot. Then you can send it to me, and I'll be able to tell you if you have correctly identified structure. So yeah, basically that's how we do it. I'll be doing a part 2 where I'll be talking about swing points and substructures, because again, there's so much to market structure, and once you get to identify market structure properly, promise you don't need any indicator on your charts. You don't need any other thing. What you need, you just need to be able to properly identify structure, and you can get to profit of these markets. So that was it for today's session. Again, guys, thank you so much for sticking through. Yeah, I just woke up to do this video, so just in case you guys hear a lot of pauses, excuse that. So see you guys on our next video. Don't you forget to help us grow this channel by sharing it with your friend, and let's grow together. So thank you, and see you on the next session. Bye bye.